The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 20th, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure you and I do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I use that little 2x4 gift, not to really knock us upside our head too much. It means you and I can find the gift in every set of circumstance that life is going to toss at us. That's the whole key, folks. That is the key to having a great day, a great life. Let's make sure that you and I do everything we can. I'm absolutely grateful for your presence here, and I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. You and I can go surfing around the markets here, try to figure out what the bulls and the bears, the buyers and the sellers, what they're communicating to you and I. This is terrific Tuesday, sometimes turnaround Tuesday. We'll go check that out, see if that's a possibility out here. Of course, anything is possible. Of course, this is the Hotel California, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 13 points at 17,217. S&P is off 4 at 2029. NASDAQ Composite down 26 points at 48.78. Russell's off 3.5 points. The DAX finished down 16. The FTSE off 7. Gold's up about $4. Silver's down 6 pennies. Light sweet crude off 24 cents. Leading the charge to the upside, let's go have a beer. A Sam Adams out there. That's up $15, up 6%. Monster Beverage just behind. It's got the devil in it. It's up $6.66. That's up 5%. You've got Team Health Holdings. That's up 688. Flex Steel Industries up 17%, 18%. That's up $6. United Technology. What a strong-looking stock chart. We'll take a look at that. That's up $5 out there. Canadian Pacific Railway, that's up $4. SanDisk up 4. Alphabet Soup, Google to the downside off $21. Tesla off 14. Amazon down 15. Anacor Pharmaceuticals off 15. Valiant down 13. Harley Davidson, the hog, in the red today. It's off about $10. IBM off $8.50. That's down 5, almost 6% out here. And in one sense, we have really a flat type of market. But, of course, IBM missed numbers. If we just take a quick peek at IBM, what we really ought to do is go take a look at the Dow, right? Because if we take a look at IBM, you can see that it is trading at or near the bottom of its August 25th swing point. The low is 140.62. You're at 140.57 right now. Volume today is more than the August 25th swing point. August 25th had 6.2 million shares, so you're taking that out with volume. Today, 10.8 million shares. Where is it that IBM is headed? I don't know. Let's go try to figure this out. Let's go take a look at a monthly chart out here. So on the monthly chart, if we just take a look at the retracement, now the low in IBM occurred in November of 2008, not March of 2009. And if you go from that low in November of 2008 all the way to the high that was put in here back in March of 2013, we can see it's trading below the 0.382 retracement level. It's in between floors. That says, hey, it's likely to go down to the next floor. The next floor inside IBM is the 0.618 retracement level, 125.42. What we can also see, though, is that the 2007 high, which really in this case here was 2008, that was on July. This is the monthly chart, by the way, that we're looking at. That price point is $130.93. So right around this 130-ish area, 132, there's a base. It's very possible that spike to 125.42, closing back above 132. That could be it. Look, if it gets below that 132 level, and yes, 125.42 is the 0.618 area. So getting below there and tagging that, not a big deal. But staying below that area, man, it says IBM wants to go down to $100, maybe even 69.50 out here. But one thing at a time. It is moving towards an area of support, but it's doing it with full velocity out there. That's not that basically creates a crash landing scenario. Now, I don't use the word crash as in a crash. I'm just, you know what I mean out here. But let's go do this. I think where you and I ought to spend our time here this afternoon. All right, now for some of you out in California, it's obviously morning, and Lord knows some of you over, in Asia, if you're up, bless your heart, it's 1, 2 o'clock in the morning out there. And of course, if you're over in London town, you're already at the brews. You're probably on your first or maybe even your second Guinness out there. Boy, that's a good thing. But let's still go ahead and take a look at the Dow. Let's first look at the Dow itself, the components inside the Dow. Now, the components inside the Dow, number one weighting inside the Dow happens to be, well, what the heck happened there? Happens to be Goldman Sachs. Is it Goldman Sachs? It's Goldman Sachs or IBM. It's one or the other out there. I'm going to go right now with Goldman Sachs. So let's actually take a look at Goldman Sachs and see what it's doing. It's either number one or number two. Now, here's what I do know. The top 10 weighting. So you got the Dow, 30 stocks. The top 10 of those stocks represent about 51, 52% of the overall indice from a weighted standpoint. So now we can take a look at all of them, see who's, what they're doing. But let's at least start here. Let's start by taking a look at Goldman Sachs. Number one weighted or number two weighted, weighting inside of the Dow. It's a daily chart that we're looking at. We can see that what Goldman Sachs has done over the course of the last couple of days has gotten up into the area where it broke down on September the 18th. That breakdown was with 6.5 million shares, came up there with a nice wide-ranging bar with 5.7 million back on October 15th. And then we can see a little doji candle up here at resistance, says it's tired. That was done with 2.9 million shares. That's light volume. Yesterday, 2.6 million shares. Today hasn't tested that level. But, the testing up at resistance is done. Now, that becomes a significant area, in my opinion. It becomes a significant area of resistance that once cleared ought to act as support, if it can clear that level. If it can't clear that level, then what we're likely to see is this is really a consolidation at its lows, and Goldman Sachs ought to get down into the 172-ish type area, which is really the bottom. Well, not the bottom, but it's the August 24th low out there. Nice little hammer candle inside Goldman Sachs on September 29th on the daily chart. That says that low is critical, 167.49. IBM, we already took a look at that, so we don't need to look at IBM again. Let's take a look at 3M. That's up 1%, up $1.55. Now, in the case of 3M, not too bad. Volume today, 1.2 million shares out here. Looks to me like it's really clear to head up to about the 153 area. 153 is where we've got this gap. Thank you, Tom. Goldman Sachs is number one structure inside of the Dow. And if we take a look at July 23rd, 153.69, that's where the open gap is with 5 million shares. It's actually tested the bottom of that candle session. It's not a swing point or anything, but just curious. That was 5 million shares, and you've come into it really light volume across the board, but I don't see anything out here inside of 3M that says that it can't make its way up to 154 out there. So it looks like that's what it's doing. Boeing, that's up 49 cents, about 1/3%. Here's its consolidation-ish type range. It's trying to get up into resistance from August the 20th. There was 6 million shares to the downside as prices gotten up here, 1.9 million, 2.3. Little key reversal type session with volume to the downside. That was on October 14th. So there's some pretty strong resistance anywhere between 141 to really 141 to 141.90. We're not going to quibble about 90 cents out here. So this is in a consolidation, the bottom of which we'll call about the 127 area. That's Boeing. Let's take a look at Nike out here. Number 5 weighting. That's down 89 cents. Of course, we say it's down 89 cents, but a strong-looking stock, no doubt. Now, in the case of Nike, if all holy heck breaks loose out here, not saying it's going to, but if it does, I see a little gap that took place yesterday between its all-time high, which was the trading session of October 16th. The high of that session was 130.59. The low of yesterday was 131.11. So we got a little gap out here. Today's candle, doesn't, it's inside bar. Doesn't mean what it really means, that typically the trend that price came from, it's going to continue. But because that little gap out there, at an all-time high, God forbid that this thing gaps down tomorrow or the next day, whenever it does, and keeps that gap between October 16th and October 19th open, and gaps down somewhere below the price level of, all it has to do is gap down below 131.11. You'd have an island top reversal, much like the IBB. Remember, so the IBB had an island top, and then things just simply got crushed. So if you were to see that out here, that would be an extremely bearish pattern inside Nike. It's got a bigger gap down here. That took place on a breakout. I think that was after earnings right around September the 25th. But that's where price would likely first head to. One thing at a time, though. Home Depot, that's up or off 16 cents. It's trading into, looks like its all-time high swing point out here from the trading day of August 19th. Little doji candle out there. So a little bit of being tired. 123.79 is a key level. Now, volume out there was about 6 and 11 million shares. We're up into this area with only 3 million shares. So not likely to take out the 123.79 area is its message, but could easily hit that area. If we look at United Health Group out here, UNH, that's off 61 cents. What is this equity doing? Not really much that I see out here of any significance, just really kind of consolidating up at its highs. So I don't see anything really too bad with United Health. Again, UNH is the ticker symbol. Apple's up a couple of bucks. Now, we know that Apple's really been trading in this little consolidation zone is what I'll call it. Anywhere between about the 116 to this little hammer candle that had formed down here on October 1st. So the low inside Apple on October 1st would be the most important low for you to pay attention to, that price point by, because if we see it close below that, what Apple doesn't have underneath it is any other kind of floor other than getting down to the bottom of the August 24th level. So, Key, we've got really a couple hammers inside of Apple. You've got one on October 1st. You've got another one on October 8th. That says the low of that consolidation, which is 107.31. That's the number that I would be watching for. If you see Apple close below that, then we'll know that because of its weighting, well, the NDX would be headed downtown. Inside of the Dow, Apple's just in the top 10 holdings out here. Not that it wouldn't hurt, but now what Apple's likely to do is, at this stage here, volume of 35 million shares. Last time up into the top of this consolidation was 56 million. I don't have my little calculator up, but volume doesn't seem to be too shabby out here. So Apple could easily be making the run to the 116-ish type area out here. If we look at Disney, so Disney's number 9 weighted. Disney looks like it's on its way up to the 113 area, where we had that big gap down on August the 5th. Let's wrap up the 10th one, Travelers, here. Let's do this quick. Now, Travelers is testing its swing point, its all-time swing point high, it looks like. That has a volume of 1.5 million shares. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Just before we go into the break, I was trying to finish off the 10th holding out there, which is Travelers. Now, Travelers is actually gapped up here. I don't know if they were out with numbers or what, but regardless of what they were out with, it did gap up this morning and is trading into its swing point, its all-time swing point high from March 23rd. Now, that has volume up there, 1.5 million shares. You've done 1.9 today. It's tested the bottom of the swing point, 109.46. But even if it closes below 109.46, get a wide-ranging bar. Don't forget to fill in that gap out there. So you have a wide-ranging bar, accelerated volume. Travelers is very likely to go test 110.49, maybe even move above the 110.49 level. But that is likely its next target. So as you and I looked at 51% of the weighting, a little over 51% of the weighting inside of the Dow, other than IBM, and the fact that things are, with the exception of Travelers now, moving higher with some light volume out there, it doesn't look too bad. And take a look at United Technologies, the number 13 weighted. Now, you and I have looked at United Technologies in the past, and what we noticed was this island bottom, as bullish as you can get with regard to a bottoming pattern, likewise as bearish as you can get in a topping pattern, hence the IBB out here. And this island formed between the trading sessions, really formed between September 21st and October the 5th. Now today, United Technology has taken out a swing point with volume. So it's come off of that C point with gusto. The B point had 4 million shares. You've done 5.5 million shares today. So what United Technology is likely going to do, it's going to go ahead for the gap. Now that gap is anywhere between 104.95 and 109.51 out there. So it looks to me like the 104.95 level inside United Technology is where that is headed to. Let's go to Tom in Massachusetts. Tom, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing pretty well, Steve. How about yourself?
Excellent. Thanks so much for asking. And you wanted to take a look at the NUGT, the 300% ETF for the gold miners. Is that right?
Yes, it is. And I was in it yesterday, buying it on the way down. Today I'm looking at it and wondering if I'm thinking about what Tom says. It's a daily trading vehicle.
There you go. Okay. Well, and you had a good day. When you entered the trade, tell me what what was your plan then?
Well, I was watching it from last week, and I said if this pulls back, I'm going to be all over it. I had the USLV last week, which I dumped, and sure enough, Nugget went down yesterday. So I just had a good feeling about it, and it got me a little nervous when it dropped all the way down to 41 or lower than that, I guess it was, So Tom says it's a daily trading vehicle, but your plan is still to use this as something more than the daily trading vehicle. Is that, which is okay. I'm just trying to understand what you're doing. Yeah, I'm thinking it's just about bringing the stop up and hoping that it, takes off again maybe tomorrow.
Okay. The reason, so here's what you're looking, and here's what we're looking at inside of Nugget. Just if we look at it, irrespective of the actual holdings, just like you and I went through the top 10 holdings inside of inside of the Dow. It's probably a worthwhile exercise for you to do that inside of the GDX, the HUI, which will the NUGT, just to get a feel as to what each of those are doing out there because of its weighting. I think it's got like 140, 143 or so individual mining equities inside of it, and I think the top 10 represent a substantial weighting structure inside there. But if we just look at the NUGT on its own, and I take a look at weekly profiles, if we just use those as natural areas of resistance for you, then this says that you're looking for NUGT, not necessarily today, but you're looking for it to clear 47.95. Now, if it can clear that and stay above it, which it's only done for 2 days here, quite frankly, since August, towards the end of August, if it can do that, then the next area of resistance isn't too much further. Just like any other stock, Tom, that we look at here. In the case of NUGT, this thing had a big gap down on July 20th. And that was 7.8 million shares. And that is a level of resistance for sure. And if we take a look at that price point, the low of that, come on, work with me. I'm talking to my system, not you. That price point, 51.40, has proven to be a formidable level of resistance. So you're at 46.10 right now. I would say at 51.40, you really should be pulling the stop up, or maybe even say, hey, this was a daily trading vehicle and it's time to take your profits.
51.40, I'd be out, yes.
All righty. That's what you should be looking for.
Well, thank you, Steve. I appreciate your assistance there.
You bet. Have a great day. That was Tom in Massachusetts. Steve with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let me correct one thing I mentioned to Tom in Massachusetts. I don't know where the 141 constituents holdings with inside the GDX came from, because clearly that was off base there. 35 is the exact number. Now, the top 10 holdings inside of the GDX, which is what Tom's concerned with regard to trading the NUGT, they represent about 55%. So that includes Goldcorp, Newmont Mining, Newcrest Mining, Barrick Gold, Agnico Eagle, Franco-Nevada, Rand Gold, Silver Wheaton, Anglo Gold, Ashanti, and Royal Gold out there. So those are the equities that you really want to take a look at. Keep your eye on each of them if you are trading the NUGT, GDX, or any other derivative of that indice. So I had mentioned that we were really trying to key in on the Dow out here, and let's go back to that. Just looking for any kind of signals anywhere with regard to what it might want to do out here. So on the daily chart, we can see that on the Dow futures yesterday with a little doji candle, what looks like maybe a 5 out of potential 7 waves to the upside. No reversal signal or anything today yet. It would be very easy, should have been very easy, would be very easy for the Dow to have a reversal candle today. When you get a doji, basically your open and close is the same. You just need a lower close to let you know that the leaves are falling off the trees. Now, we also know that the Dow on a daily basis Take a look at the futures contract, broke through its rising price channel out here. So it's always possible that what's underway is A to B equals CD to the upside inside of the Dow futures. Now, that would actually take price, whoops, there you go. That would actually give you a price target. This would be a Gartley sell pattern that would take you up into the 17,451 level. So that's about another 340 points north of where we are at right now. So we cannot rule that out, even though we're up on light volume. That's what the daily is communicating to you and I. Tired, yes, but we still can't rule with no reversal signal as of yet. As of 1:30, that can change by 1:40, but we don't have that. Now, on the 300-minute chart out here, what we have is you've got a new market profile that came into play here over the past 10 hours. So the beauty here is the key number to be watching inside of the Dow futures is not just a close, not just a negative close today, giving you a reversal bearish engulfing or something like that inside of the Dow on the daily chart, but instead you want to see a close below 17,046. If we see that, then what we ought to see at a minimum is a move down into about the 16,850-ish type range out there. We know that price inside of the Dow has been moving higher, has been doing it with less relative strength. We haven't seen a close above that high out there. That was, by the way, yesterday's close on the contract. So we've seen that level be tested, but we have not seen that level, a close above that area. So the 5-hour chart says, okay. You can make you got the daily says tired. You've got the 5-hour out here that says a new market profile, and the price is not down too much further below where we're trading right now. So, you can watch for reversal signals. Inside the 120-minute time frame chart, coming off of the low out here back at 4 p.m. on October the 14th, so just a few trading sessions ago, we can see that we have confirmed now a 7th wave to the upside. That's unless we see in the next 20 minutes a real move higher, because coming into that 12 noon time frame, that was the 7th wave move. Now, inside the 120-minute time frame, I don't recall the number I gave you on the 5-hour chart, but the number on the 2-hour chart is about 17,050 is what we'll call it. So any close below that, and I'm not talking 049 and 048, but any close below that, that would suggest that, okay, a retracement, at least a pullback or something else is underway inside of the Dow out here. That was on the 2-hour chart. Real quickly, let me peek in, see what I've got on the 30-minute chart out here inside of the Dow. Actually, Stevie doesn't have much other than the 17,077-ish type area. So those are numbers for you to pay attention to inside of the Dow futures. I will point out, as was pointed out inside the den just a little while ago, that if we take a look at that 30-minute chart here for the Dow, it has hit that 7th wave move to the upside. And if I blow this up for you, what you're going to notice here right now is on the time frame here of 1 p.m., what formed out inside of the 30-minute chart for the S&P futures contract was a nice little hammer candle. Now, that low is being tested, was tested during the last half-hour session. That's at 2020.50. You're at 2020.25. So as we come into the 2 p.m. session, if you see a close inside the ES Mini below 2020.50 out there, that would be a signature or a sign of the beginning of a potential retracement. And why do we want to be looking at that? Nothing has changed between yesterday or Friday, in that what you and I see out here amongst the indices is we see a declining tops price oscillator. That's inside the New York Stock Exchange. That's the left-hand panel. Just to the right of that is the NASDAQ Composite. Same pattern out here. With in both cases, prices were rising higher. Same pattern inside of the Dow. And that suggests that, that suggests that there's some type of retracement to top that is out there. We can't discount it. Now, when we take a look at what's going on inside of the indices, take a little bit closer look, and we look at the S&P 500 out here. The S&P 500 has still not broken above its descending trend line. Now, this is the trend line coming off of its July 20th high out there. That is the all-time high inside of the S&P 500. That high, by the way, is 2132.82. I believe that's the high, right? Yeah, 2134.72 on May the 20th. my apology, off by $2 there. Nonetheless, there's no real trend line to be looking at off of the May 20th level. So we are taking a look at the July 20th area. We can see that price, today, in essence, came close to testing that area. Now, we don't have an A to B equals CD pattern inside of the S&P 500. All that we would have at best case is a consolidation pattern. If you take a look at what that consolidation pattern would look like, it's really the September 17th high and at the bottom, September 29th and the August 24th, 25th timeframe. So we have seen where price has broken above that. If the S&P, quite frankly, can crack that descending trend line out there, then what that says is, like any consolidation pattern, your move is equal to or greater than a consolidation. That actually would say new all-time highs inside of the S&P 500. But we'll take things one day at a time. It's not going to happen until there's some kind of, or it should not happen until there's some kind of retracement. Those are the signals coming from the price oscillators out there, and rarely do they fail. Now, New York Stock Exchange as well, nowhere near its trend line out here. That's the red diagonal line, but that's not the case. We take a look at the NASDAQ Composite or the NDX 100. If we take a look at the NASDAQ Composite out here, we can see prices above the trend line. That is using its all-time high from July 20th. That's using the September 17th, which I believe to be an important swing point out there. And because of that importance, even though the diagonal trend line has been breached, the horizontal, in the case of the NASDAQ Composite, that is the September 17th high at 4960.87, that has not been breached. So price inside the NASDAQ Composite needs to get above that. Now, if it does, this does have a potential A to B equals CD pattern that would set it up, that would take it all the way up to its highs out there. Inside the NDX 100, a little different story. We mentioned that Apple, was looking pretty good, trading inside its own little consolidation box, and no reason for Apple not to go target the top of that box. I think that's in the 216 area. Inside the NDX 100, you can see that today it has rejected thus far the September 17th swing point, but there was a close above it yesterday, albeit on light volume out there. So the number to be watching inside the NDX 100, 4450.66 out here. If you see a failure inside the Dow futures contract that we looked at from a numbers standpoint, then you see the NDX close above 4450.66. You've got a tale of two worlds out there. And with regard to the world that could drag things higher, I would say it's more likely the NDX 100. Why do I say that? Because you and I took a look at the Dow. We went ahead and took a look at the top 10 holdings. And other than IBM completely flailing and wailing out here, everything else seemed to be okay, albeit on light volume to the upside. So 4450.66 is a key number. Now, where's price likely to pull back to the first level? If there is a pullback that begins anytime soon, I would have to say the 4350-ish type area is the place for us to be watching first. The gap out here from October 2nd is the second place. That's the high of 4267.45. So those are the areas to be watching as we take a look at the indices out here. Let's go take a look at some other things in the market. Tom had called from Massachusetts asking about NUGT. Of course, in order for that to move higher, he's going to need Goldilocks to move higher, basically because of the two-step tango that these two perform. And we can see that the gold contract here, has completed a 1-to-1 A to B equals CD to the upside, close to a 0.786 retracement. So we've got a Gartley sell pattern. That Gartley sell pattern coming in off of the swing point out here from the trading day of May 18th, off of that high. So even though gold is up a few bucks today, my take is that gold actually wants to pull back. Pull back to where? That's an excellent question. Since we've got a new market profile that has been around for the last 2 days, just like I believe it might have been inside NUGT, I would say Goldilocks ought to pull back into about the 1141 level. There would be nothing wrong with it pulling back to that level. In fact, if let me just go ahead and clear up the screen here. When you have any type of a Gartley pattern, clean one more clean. There we go. Okay. So when you have any kind of a Gartley pattern, and we don't need that out there, the normal retracements, you've got really 3 levels of any kind of a Gartley, in this case here, Gartley sell, which is what we've got. You've got your dead cat bounce, 0.382 retracement, 1146, so that would be a target as well. And 1118, pull back to 1118, people will write gold off as being done, when really that would be just a normal retracement out there. Again, the levels to be watching inside of Goldilocks, if Stevie is right here, is 1141 to 1146 as your first areas. Any close below those, and you're looking at 1118, and that's looking at the December contract for gold. Silver out here is up 2 pennies right now. It's basically been flat most of the day. In the case of silver, it too has completed an A to B equals CD to the upside. If we take a look at where silver could or should pull back to, we'll just simply come from the low of August 26th. Well, we were going to do that. Let's try that one more time. Let's come from that low of August 26th up to the high out here. And in the case of silver, this is perhaps where we get the real message about what gold is going to do. Silver really was more of a leader on the way up. Maybe it's going to be a leader on the way down. Maybe this is nothing more than a sideways consolidation working off a little bit of the overbought condition. That would be extremely bullish out there. We cannot rule that out. We have a new market profile inside of silver that formed today, and that low is 15.70. So any close below 1570 out here, that says you're looking at 1533. And again, silver would likely close below its market profile low. Doesn't have to, but would likely be the first one to close below that low before gold would get down there. Maybe that's a little bit of a leading indicator. Likewise, getting back above $16.19 would be extremely bullish for silver out here. So again, closing below 1570 brings 1533 to 1480 into play. I would expect 1523 to hold as a pretty good level of support for silver out there. Natural gas is up just slightly. Let's take a look at natural gas. You know, natural gas was supposed to have found a bottom in September. I believe it is October 20th, and we have not seen that bottom. There was a swing point low thus far from the trading session of October 2nd out there. So we'll qualify that as September, but if that gets taken out, and that's where price is trading into right now. So when you trade into a swing point, light volume, heavy volume doesn't, well, heavy volume says you're going to go test the low. Light volume says you may go test the low. In this case here, $2.60. But we certainly have not seen any kind of sign that natural gas wants to take off to the upside. Hey, we haven't looked at any of the individual stocks out there, so let's not be remiss about doing that. Let's you and I go have a beer, and today let's make it a Sam Adams. This thing is up with volume of 212,000 shares out here. What is Sam Adams doing? What in the Sam heck Adams? It's up above profiles. It looks pretty good. The swing point for the A to B equals CD was September 21st. That had 153,000 shares. You're up and over it with 150, 192. So you've got a confirmed A to B equals CD to the upside. You can see it's already at least made the first one. The second one, now it's headed on its way up to 263.97. Is likely. Now, that's going to take you right into a whole set of swing points out there. That's probably where Sam Adams decides to take a nap, because it could have had a little bit of a hangover out there. That ticker symbol, by the way, SAM. To the downside, Google. Let's go look at Google. It's off $25 right now. That candle doesn't look very good. Volume today, 1.7 million shares. Now, Google, alphabet soup, that's trading inside a consolidation from 700 to 604. So you've got a 100-point consolidation. Key level of support, not too far away inside Google. That number is 663.88 to be exact. This is Steve Rhodes with TFNN. Dow's off 22, S&P's down 6. Be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. During the first or second segment there, we looked at many of the Dow stocks. We took a look at Apple in the top 10 holdings out here. So let's go pull Apple apart just a tad because we're looking for signals. I mean, we have, as I say, for the last several days, we've been seeing in the declining tops price oscillator out there. That's a really early warning shot. So all that you and I are probably doing at this stage, we're trying to figure out where to pick our battles here. If that being the case, that means we've got to really focus in on some of the things I think that I've shared with you thus far today. So when we take a look at Apple, we just really go down to a 30-minute chart to get a feel for what it's done. Number one, in essence, it's completed an A to B equals CD. That A point out here, occurring down here, looks like at about 12:30 on October the 8th. Your B point out here, right around the 7:30. So I'm taking a look at all the trading with inside of Apple. So your numbers will be a tad different than that. That's October the 12th, and then my C point out here about 12 noon on October the 14th. The 1-to-1 would take it to 114.52. We've gotten up to 114.15. For me, in my line of work, especially with Apple, the C to D leg completed way over on the right-hand side of the chart. That works for me. So we've got that pattern. We also can see that the swing point expansion, and again, this is where it'll be a little bit different than yours because I've got the pre-market trading inside here. But if we go from a high at 7:30 on October the 12th, which was 113.17 down to a low of 109.56, you can see that the price projection of the 1.272 expansion was 114.15. The actual interest session high thus far, 114.17. You got to like that. So what does that say? That says you actually have a butterfly sell pattern out here on a 30-minute chart. Now, you've got a butterfly sell pattern out here. You got a little hanging man. I don't consider that to be bearish, a bearish candle. Many people do. Fine. What we do have, though, is you got a little bearish engulfing candle. That's a different. So you have a bearish reversal signal at the completion of a 30-minute butterfly pattern out here. So what's the next thing that you would look for today in the case of Apple in order for this to be a failing pattern to maybe have more of a meaning other than something on a 30-minute chart? Well, you look for two things. One, you want to see it close below the 112.83 area. That would be a brand new market profile that just came into play here during this 30-minute session. And you'd want to see volume picking up, like more than 8 million shares to the downside as it gets into that area. Otherwise, Apple could really just come all the way back to this morning's open. And if it does that on late volume, it's just coming back into where it broke out. So again, these are the things in my, these are small little things, but it is the small things in life that count out here. Likewise, if Apple pulls back and holds the 112.83 level, and or it gets above 114.15, it'll go up to the next level, the 1.618 expansion out there. So you've got the Dow off 17. The S&P is off 5. You've got real headwinds out here today. Those headwinds being the euro, Japanese yen, which is trading now. It's the 30-minute chart out here. Let me put the daily back up on my screen. And again, it's held its bottom. If this market is really going to crack, we're going to see that rising trend line crack as well out here. So, folks, it is a terrific Tuesday. That means we've got a terrific lineup. Obviously, after me, we've got the one and only David White. Then we've got the Tom O'Brien Show from 3 to 5. Andy Heck, who will take it on home from 5 to 6, covering all the commodities out there, gold, silver, wheat, you name it. So we've got a great lineup. As always, thanks so much for joining us here, and have a terrific day. Be safe out there. Use stops on both sides of the trade, right? Always have an exit plan. Take care, folks. Look forward to seeing you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.